What's up, guys? I'm doing a update here, global macro. I went through the crypto market a little bit earlier. Let's start with the dollar. It looks like, it's still early in the week, but I think this is the start. We've made some pretty big calls on the dollar. You get the dollar right, you're going to get a lot of other things right in global macro as far as asset classes and just the flow and overall major shifts in the longer term trend. So we made the call back in 2014 that we would break it out into a new bull market. We had another good call here in 2018 that a lot of people thought the dollar was going to break down. We thought it was actually upholding about 50% or halfway of this wall, our wall concept, or 50% retrace of the move off the lows from 2014, and that we were still in a long-term bull market. We've liked the dollar, and nothing's changed there. You can see that this is the monthly chart. We're holding the 8. And market's done nothing wrong. Now, this is pretty big, though. We've kind of highlighted 97, 98 for a while, and we'll see here in a second on the euro. But I think if we hold up here this week and this month above 98, then everything points to a retest of 2016 to the start of 2017 highs here, 102, 103. And so what does that mean, global macro? It probably means softer market for commodities. It probably means more capital flows into the U.S. because the dollar is strong. The dollar is probably going to be rising also because of the same reasons of the capital flow. But I also think it can maybe start to kind of put a cap on oil. Oil's been one of the best places to be long this year, especially from generating an alpha perspective. And so let's see. We've been trying to play a little bit short, core short oil. Intraday, there's been some nice buying opportunities, day trade. But I think it's all about this dollar. So this is what I'm really watching. I think that matters the most here. There's, stocks are back on the highs. Everybody kind of knows that. Large cap stocks have kind of just been grinding back towards the October highs, and in a low volatility environment, it's kind of made for kind of some sluggish trading. It wasn't like in October, November, December, we had a lot of back and forth action. It was pretty good trading. It was a little bit more exciting. The energy was higher. Now we're kind of been dealing in this low vol environment. I think it's been a little bit stagnant, but I actually am glad to see this euro finally breaking down. I'm hoping we get a big picture move. So the call is for stay bullish the dollar. Retest of the highs from a couple years ago is definitely in the cards. We'll see how we close the week. And what that means on euro shorts is just we want to look for places to keep adding. So the weekly cycle is pretty low. But when we get these setups on the 4 hour, the hourly, I think it's all opportunities to get more short. And you want to start to feed into this, keep a nice average of profit cushion on your average cost, but looking for opportunities to get more aggressive. I don't think this is by any means the end of a move here. I think this is the start of something hopefully bigger picture. FX has been really sideways to unchanged and choppy for most of the year, so I'm hoping that this will shake things up. I think that's all I want to say on the FX side. Equities, we've had a good call to play S&Ps only on the long side for the last couple of months, and I finally got flat here into the prior highs. You can see it better over here. So up into 29.47, finally started to get flat, and I just think it's kind of wait and watch. There's some people that want to short it here. I don't think you have to be a hero. Maybe we back off, but I think if you look at what the Nasdaq's done, you look at the capital flows, I think the path of least resistance is still that we run the shorts here and we can extend even higher. We were talking about the other day about some calls on the Nasdaq. 8,000 strike probably makes sense. Getting a little bit more follow through today. And then the VIX, kind of the opposite side of that. Well, I guess I'll do the Dow. Dow, obviously 27,000 is a pretty key level we're watching. You're still hugging the 8. The only market that I'm interested in shorting would be the Russell, and I'm still, and kind of the line in the sand there is the 1600 level. Russell's been, it's a much different looking chart than the Nasdaq and everything we just went through. So I'm okay if you want to play along on any of the other indices and play a short against it. I would rather short the Russell. We've been kind of doing that. I have IWM puts. I don't have any features on at the moment. I guess that's all I have to say about that. When we look at the VIX, VIX to me is still kind of hanging out in the middle. I mean, the front month VIX has been pushing towards 12 the last couple times right before the futures rolled. To me, it's kind of right in the middle of where I care, so I haven't done much on the VIX. I mean, we were buying a couple weeks ago. We came out of some of those calls. So I don't see a whole lot to do in vol. And then treasuries, we still like, still bullish on bonds, and kind of a nice bottoming tail with the cycle here around the 18th, the middle of April. And yesterday I actually added to my 10s. So I'm playing long 10-year and small short 5s against it, which is a small flattener. But directionally, I still think you want to be a buyer for sure. So any type of pullback here in treasuries, I'm a buyer, whether it's 10s or 30s. I want to increase my long position. Obviously, the next resistance is 123.28. Highs from early April. We'll see if we can extend up there. I don't want to do much in gold. It's going to probably remain soft to sideways with the dollar doing what it's doing. We've been watching 12 3/4. Kind of holding our pie line. I'm not really surprised. The market's kind of, nobody's going to really have that pie line, but from a cyclical standpoint, it makes sense that we're kind of hanging out there. I already hit on oil. I think that pretty sums it up, guys. Again, if for those of you that maybe don't know, we're changing up our membership program. I'm excited about it. We've been using a lot of the chat apps, so whether it's River or Slack, and I'm actually going to be demoing and moving to a platform that brings everything together, live streaming, chat. We're going to bring it all into one membership. It's going to be a cheaper price, which I'm excited about. It's actually a lot more value, but I want to just extend the membership and kind of give everybody the best of both worlds. So I'll be coming out with that hopefully later this week, definitely the start of next week. So stay tuned there. And also I'm going to be rolling out a couple offers on our trading courses and coaching programs. So stay tuned on that. And I'll see some of you guys in the chat.